Hello, hi, my name is Amira and I'm going to present about the insurance planning. So the first one is introduction of insurance planning. Okay, what is insurance planning? Okay, insurance planning is to protect yourself, your family, your loved ones, your home and your asset or your business against unexpected event. Okay, the idea behind insurance is to get a group to contribute financially to a fund specially designed to help individuals recover in the case of an expected loss. Okay, insurance is a key for you to be more focused on the important things in life. This is because it will ensure financial security for you and your family if unfortunate things happen, such as when large financial burdens like hospital bills or medical charges raise. Insurance helps meet the costs and allows you to pursue your dreams. It is one of the efforts to reduce uncertainty. Is the types of insurance. There's 5 types of insurance. The first one is life insurance. Okay, what is life insurance? Life insurance is what we can avail in order or to safeguard our family in case of our death during the tenure of the policy. Okay, life insurance helps secure your family financially with a lump sum amount that is paid out in the event of the policyholder's death within the policy period. Okay, the second one is health insurance. Okay, health insurance, this is a purchase or for covering medical expenses revolving around various health issues including hospitalization, treatments and so on. Is child plans. This insurance policy are savings instruments that helps in generating lump sum funds whenever children reach a certain age for pursuing higher studies. The life assurance is that of the child or the recipient of the fund, while the parents are the policy owners. Okay, the fourth one is home insurance. Okay, home insurance is cover any damage to the home on account of accidents, mishap, and natural calamities, among other such events. The last one is auto insurance. Auto insurance is plans for vehicles, including cars and bikes. It protect against natural calamities, damage to third party. Purpose of insurance. Why we have to take an insurance? Okay, insurance planning is a critical component of a comprehensive financial that includes evaluating risks and determining the proper insurance coverage to mitigate those risks. Okay, the principal goal of insurance planning is to identify and analyze risk factors in life to seek proper coverage to attain a peace of mind if disaster strikes. So this is a good thing if you take any insurance policy in your life.
Assalamualaikum warahmatullahi wabarakatuh. My name is Masna Fitra. I'm going to explain the importance of insurance planning and the current issue. Okay, insurance plans are beneficial to anyone who are looking to protect the family, asset or property, and themselves from financial risk or losses. Insurance plans will help you pay for medical emergencies, hospitalization, contraction of any illness and treatment and medical care required in the future. Insurance planning can give protection to you and your family in terms of financial. For example, if any unexpected event occurs which need a large amount of money, insurance can be covered for you and you can only focus on you, your family and other issues. Besides that, you can reduce stress during difficult times. Current issue. Year of 2020 is the worst battle with the coronavirus or COVID-19. The first public message about the virus was on December 31, 2019. Malaysia were also affected by the COVID-19, and the first case detected in Malaysia was on January 24, 2020. The case did not end there. Malaysia reported the first death from COVID-19 was on March 17, 2020. Malaysia experienced COVID-19 cases which increased drastically. The result led to a nationwide lockdown known as the Movement Control Order or MCO starting March 18, 2020, and it's announced by Prime Minister Tan Sri Muhyiddin Yassin. The symptom of COVID-19 has been provided by the Ministry of Health Malaysia as per picture. This is for Malaysians to be more aware of the virus. The symptoms are cough, fever, muscle pain, shortness of breath or difficult breathing, sore throat, loss of taste or smell. As per current issue on the above, we can see that COVID-19 is one of the risks that we can't predict. It cannot be seen nor avoided. As we all knew, until June 2022, every day there are new positive cases and deaths because of COVID-19. However, the number of people affected is not as high as before. It is shown in this picture. The table shows the total number of bank employees who are selling life insurance in Malaysia amounted to 17.3 thousand people. It shows a general insurance agent is to obtain insurance business from customer or prospect of the insurance company.
Hi, now we come into introduction on consumer credit. Consumer credit is defined as a personal debt that is taken on to purchase goods and services. A credit card is a common form of consumer credit. Consumer credit can also be known as consumer debt. Although personal loans are considered as consumer credit, it is more often used to describe unsecured debt that is taken on to purchase every goods and services. Credit, when handled correctly, may be a useful and efficient financial tool. Credit is the American way of life, from a basic credit card to an auto or home loan. Cashless transactions are quickly becoming the norm, and credit cards are one of the most widely used. Understanding credit is necessary in order to take advantage of credit and avoid the frequent financial trap of debt. There's a few types of consumer credit. Number 1 is installment credit. Number 2, revolving credit. Number 3, charge cards. And number 4, non-installment or service credit. Installment credit. It is used for a specific purpose and is issued at a fixed amount over a specific timeline. Payments are usually made monthly in equal installments and are issued for major purchases such as appliances, cars, and furniture. Installment credit is usually offered at the lowest interest rate as an incentive to the customer, and the item purchased serves as collateral should the customer default in paying the installment. Revolving credit. An example would be credit card, where it can be used for any purchase. The credit is revolving as the line of credit remains open and the consumer can use the credit to its maximum limit, as long as the borrower pays the minimum amount every month. This type of credit is available at the highest interest rate as it is not secured by a collateral. Next is charge cards. This type of credit is frequently confused with a revolving credit card. The main distinction between a credit card and a charge card is that a credit card can hold a balance, whereas a charge card must be paid in full each month. Penalty fee will be imposed if the amount is not paid on time and in full. The example of well-known charge card is American Express, This type of credit is beneficial in terms of avoiding credit card debt. Lastly, non-installment or credit service. The borrower can use this type of credit to pay for a service, membership, or other item at a later period. Payment is usually required the month after the service, and overdue accounts are subject to a charge, interest, and penalty charge. Non-payment will result in service termination and may be reported to a credit bureau, negatively impacting your credit score. In our daily life, services or non-installment contracts are fairly prevalent. Service credit includes things like cell phones, gas, and electricity. Now we come to the purpose of consumer credit. Consumer credit is usually offered by banks, retailers, and others to enable consumers to purchase goods immediately and pay off the cost over time, the interest. Generally, it is divided into 4 categories: installment credit, revolving credit, charge cards, and non-installment or service credit. Consumer credit allows people to secure a loan against their future earnings in order to buy goods and services. That can be life-saving in emergency, such as a car breakdown. Because credit card is relatively secure to carry, the United States is quickly becoming a cashless society, with people relying on credit for both major and small purchases. Consumer credit on a revolving basis is a lucrative business. Consumer credit is available via banks and financial organizations, department stores, and a variety of other enterprises. Now we come to the importance of consumer credit. The existence in the concept of credits enable business transactions to take place efficiently and the economy can grow. Credit helps companies have access to tools that they need to produce the things we buy. A business that doesn't enter into credit might not be able to buy the machines and raw goods or pay the labor needed to produce product and make a profit. Credit also gives access to the majority to purchase the things they need. For example, a house or a car that is usually nearly impossible to pay all at once. With credit, this enables them to purchase these items and pay them over time with interest.
Hi, I'm Nurada Binta Matswami. I'm going to explain about the current issues on the consumer credit. The first point is that animals, public health, and larger economic gratifications. Bank institutions are able to help their customers, and for the government as well, they can give the approval to us to take the money in the category XP. And for the second one, the current issues nowadays in the consumer credit is decline during the pandemic for credit cards, but it's actually increased for mortgages and auto loans. It's actually in a report released by the Consumer Financial itself. That have been stated in this slide. As you can see, the start of the October on 2021 until on the May of 2022. For 2021, you can see there has been increase up until 441.6 billion for the consumer credit itself, and you can see due to expected improvement in the macroeconomic factors such as employment and GDP and access to credit cards also, and personal loans was expected to rebound in the first half of 2022. It's really very good. And while some consumers might have overextended themselves and will struggle to make monthly payments once the government assistance program is ended, and many will seek loans again and send their balance to back up. And then the recommendations for the insurance itself is more and very important to help to provide the financial security for our family when needed. Somehow we doesn't know that we really urgently need that funds to pay the medical costs, because medical cost is quite pricey and very expensive, especially in the private section hospital. So and then choosing the appropriate insurance to carry also can save you
a lot of unnecessary stress. And then for the consumer credit, it's a quite important aspect of a modern financial services, since it allows people to attain many of their aspirations, to minimize over-indebtedness and related problems which are harmful to both consumers and business. And it's critical that consumers' credit be supplied fairly and responsibly as much as possible.